Okay, we're live. All right, Omar and I are excited to get started, but we've got another minute before we officially kick off. So grab your coffee, get your water, get yourself settled, and we will start in less than a minute. Thank you for tuning in today. Super excited about this. Hopefully, you all had a nice long weekend. And it's always crazy coming back, isn't it? It's always like hectic and trying to catch up from being off. I know I had 4 days off. Did you have a long weekend? Yeah.
hmm
And then you come back on Monday. I swear, I felt like I'd been away 4 months, not 4
It's
days. Monday morning, I was like, "What do I do?"
it's an
Oh,
adjustment. Yeah, I
it
think
is.
it took me a couple days too because I was in conference and I lost track of what day it was yesterday.
Oh, so totally. And I've actually been a week ahead. So I've been
hmm
saying things like next Friday, but really what I mean is like the week after that, right? So I'm all messed up. And then I was sick and my brain was just mush. So I feel good today. I feel like I'm back. All right, let's go ahead and get started.
Sure.
Welcome, everyone. Thank you for tuning in and thanks for being here with us and in the other nonprofit coffee talks. I hope you're finding them useful. I know you're going to find this session today helpful because there's so much anxiety and myths and fear around borrowing money for nonprofits and going into debt. So, this is going to be a great session for you if you feel like that. I am so excited to have here today Omar Elhagmusa, who's going to talk about the prudent use of lending. And so, welcome, Omar. Tell us a little bit about yourself.
Well, my name is Omar Elhagmusa. I work for IFF, which is it doesn't actually stand for anything right now. It used to stand for Illinois Facilities Fund. So I'm just going to go ahead and say that right now because everybody's like, "What? What does it stand for?" And you're going to go online. You're going to probably try to find what it stands for, and you're not going to find it because we've branded this thing and just like took that out because we are now regional. We just don't do Illinois, and so that is what IFF stands for. I am what I call myself a reformed banker, and that's because I used to be a top banker at Huntington. I was the number one um, branch manager out of 700 branches. Did pretty well, making rich people richer. um, and I wanted to try something different. And so one of my mentors, actually, even when I was a banker, I was always donating my time, providing, financial literacy, helping with homebuyer education classes, just trying to just give back as much as I could. And it was actually kind of that was my fun. Just such a nerd like that. Instead of watching TV, I would go to like um, civic association meetings and community events and that kind of thing. Uh, but then my mentor, uh, who was the head of a CDC at the time, Franklinton Development Association, mentioned this opportunity with this CDFI, and thought that I would be a good fit. And I was like, oh no, that's not for me. I could not possibly. They wouldn't possibly want me, right? And so I had to stop myself and say, I need to stop doing that. If my mentor thought that I would be a good fit, then at least out of respect for him, I might as well go ahead and give it a shot. So throw my hat in the ring, and they liked me. They hired me. So that started my journey in the CDFI space, which is community development financial institutions. So that is a sector of banking that uh, tries to um, deploy capital that banks can't, um, and did pretty well. Deployed millions of dollars to um, nonprofits and for profits at Finance Fund for about 3 or 4 years, and I learned a lot. And then IFF came calling, uh, new challenge, different challenge, larger CDFI. We can do more good, and so here I am at IFF.
Thank you for that. Appreciate it. We're a lot alike. I'm also a nerd about helping others, so it's
That's
a
why we click
wonderful
so
thing
much.
to do.
Yeah.
Yeah. Um, and just by way of introduction, I'm Libby V, nonprofit champion and founder of Libby V and Associates. Through visioning and strategy work, leadership coaching, development support, and organizational and board development, our nonprofit leader clients successfully raise more money and have more impact. But not all nonprofits can afford to hire a consultant. So I created the Nonprofit Coffee Talk as a way to provide great content and helpful information and bring on amazing guests like Omar, and get that information out to as many nonprofit people as I can. So I hope you find it useful. Please always feel free to suggest other topics you'd like to see or other guests that you think I should have on, especially if it's you. I'd love to have you on. So reach out to me, please. All right. So with that, let's kick it off here. Omar, tell me about IFF. Tell us about what IFF does and how it's different. I love what you said just a minute ago in your intro about, it's different, right? It's not like
Mhm,
going to the bank and
mhm.
getting a loan or a line of credit. So talk about how IFF services nonprofit organizations, and how it's different.
Sure. I don't want to say that IFF is the only game in town and that we're just so much better than anybody else. This is not an infomercial about IFF. But I will talk about the CDFI space, right? So CDFIs exist because of the CRA. Most of your listeners probably are well aware of the Community Reinvestment Act. This happened in the early 70s, I think, as a result of redlining, and banks, but not just banks, but insurance companies, governments, like whole sectors of the economy, basically colluding with each other and saying these areas where Black people live cannot get any financing, any insurance, any financial products. And that had a detrimental effect in these communities for decades to this day, right? We have, if you overlay, um, you know, premature deaths and diet related illnesses and all kinds of systemic issues in these areas, um, it just it is like a match between these redlined areas, historically redlined areas, and all of these systemic issues. And so the government's reaction to that is to hold banks accountable. Didn't hold the government accountable, didn't hold the insurance companies accountable, who also were just as accountable or liable to this. But the banks are still on the hook to reinvest in communities where they redlined in the past. Well, um, the problem is that so the CRA is a regulation that they have to abide by, but there's also other regulations that banks have to abide by that are considered, what would be required to make a prudent loan, quote unquote, prudent loan. And they're just not able to do that. So they make these announcements about deploying this capital, and then they can't do it. And so CDFIs exist to deploy that capital on their behalf. And we're less regulated than the banks. And so that allows us to create different products that actually meet the needs of communities and sectors that need that capital. Um, and so we take investments from uh, banks, from faith-based organizations, from philanthropy, and then we assume the risk, and then we deploy the capital on their behalf. These aren't grant dollars; these are loans to us, and then we assume the risk, and then we deploy the capital. Um,
Can I
So
just
that's
say
the
that that's
CDFI
like
space.
that is so clear. That is great. So thank you for that.
You're welcome. It's taking me a couple of years to try to explain it in a easy to understand way. So thank you.
Yeah,
Uh,
it's complex.
it is. It's more complex than I'm saying, but the gist of it is this. This is exactly what
Yeah,
it is and why it is happening.
yeah.
And so IFF is one CDFI out of many in Ohio, operating in Ohio. And there's many CDFIs that have different focuses. So in Columbus, there is the Affordable Housing Trust, right? And so they focus just on housing, right? Then there's ECDI that just focuses on micro lending to small businesses, right? So IFF just focuses on nonprofits, right? So nonprofit facilities and equipment and bridge loans for capital campaigns.
Yeah,
Oh,
that
and
is
I'll
good.
just say that
Yeah.
that's not access to capital is not sufficient, right?
Mhm.
And so what I call moving capital to justice takes so much more than just capital, right? And that's where our nonprofit partners come in, right? They're the ones who are creating programs, working with government, philanthropy, business, connecting with the community, empowering communities. And all of that is messy and hard and complicated. Our strength and what we do best is raise capital and deploy capital so that it matches the activities those nonprofits do.
That's great. Love it.
Mhm.
Um, Excellent. Okay, so um, I have another question, but I wonder if you could talk a little bit about um, sort of the your experience about your experience working with nonprofits. Sorry, I got distracted by
Mhm.
something. That happens all the time, by the way. Squirrel, right?
Right.
Um, yeah, it's hard to have ADHD.
I'm with you.
um, Talk a little bit about your experience working with nonprofit clients and where are there perceived challenges around taking on debt or even thinking about borrowing?
Okay. So here's my personal experience and my personal theory around this. This is not factual. There's no like studies that I know of that kind of touched on this. But my thinking is that the public has been exploited for the past ever since the 1970s with the lack of financial literacy, right? And overabundance and availability of bad debt. And on top of all that, wages going down and people trying to supplement their quality of life with debt. And so people get caught up in this stuff. And in the nonprofit space, it's even worse because the
Yep.
ability to pay isn't quite as much, right? And so people make trade offs because of the mission. And so the combination of lack of financial literacy and bad actors like credit cards and car loans and that kind of thing, I think has given debt a bad name.
Yeah.
And that is the worst way to use debt, right?
Yeah.
There's a good way to use debt and there's a bad way to use debt. And I think the recognition of when debt can be used in a prudent way to maximize mission and financial well-being for the organization, we should do that. But not many people actually have the tools to recognize when that is the case. So if you want me to transition a little bit into some of the benefits of
Yes.
using prudent debt, I think the benefits of using prudent debt in a responsible way is more mission ultimately, right? So the benefits are growing your net assets over time. That's kind of the lowest hanging fruit, and that's kind of accounting speak for um, growing your equity, or kind of buying an asset, and over time chipping away at it and it actually growing in value, much like your home, right? Nobody would question getting getting financing for your home, right? Especially in Columbus. We're experiencing rapid appreciation, and the people that are in a position to buy are benefiting from that. But the people that are sitting around renting, unfortunately, are experiencing upward pressure on rents, right? And have nothing to show for it if they have to move.
Mhm.
Similar
Sure.
in the nonprofit space when you're renting space. You have no control. You have no control over your destiny. No certainty about if your lease is going to get renewed. So an example of this is we helped a nonprofit organization called ModCon. Their old name was the Tool Library, the Rebuilding Together of Central Ohio,
Yes.
and they thought they were in good shape. They met with me and they're like, "All right, thanks for this information." And we didn't know that we had access, to this kind of capital, but we're good. We don't need anything right now. And then, a couple months later, they reached out and said, "Hey, our landlord is retiring, and our new landlord wants market rate rent. And we have a huge warehouse, and the price per square footage would just, end our program. It wouldn't make it feasible to operate. So we need to figure something out." And this is the board talking to me, right? And so um, we figured out a way to get them into a lease with an option to buy on a new property. And then when they were ready, they were going to exercise that option at any time. And so they did. And we helped them get into that building. I think it was like 500,000, something like that. And the crazy part is a year after, I stopped by just to say hi and see how everything was going. And they let me know that a similar building next door sold for 1.8 million. So they feel like they made a good decision there, right? Um,
Absolutely.
and that's the prudent use of debt, right? That is the
That's
use,
great.
and guess what? The payment on the new mortgage versus the payment on the rent. How much of a difference do you think that was, Libby?
Probably not much. Rents are
Not
so
much.
crazy, right?
It
They're
was $18 a
holy
month.
cow.
That was the difference. So essentially, they're transitioning from one, you know, position, right? So rent position to ownership position, and the only difference is $18.
And that's probably pretty typical, I would
Yes,
assume. Mhm.
yes, because again, we're not, when people think, oh, we're gonna have this insurmountable debt, we'll just look at the payment, right? And let's figure out a way where this transition is as seamless as possible for your organization. If the payment is going to be unreasonable, then we're going to have to find some subsidy, right? But I think a lot of people think about this in a very binary way, either have all debt or no debt. And that's not the case. There, another option is a mixture, right? What does a mixture
Yeah.
do for you? It allows you to not beat your donors over the head, you know what I mean, for multi-million dollar capital campaigns, and where maybe sometimes you don't have the capacity. Your donor base is not big enough, unfortunately, to support that initiative, right? So, but they are big enough for half or a quarter, right? And guess what? You can take the payment on your rent that you were already comfortably paying, plop that into your new pro forma, and now you've unlocked the leverage of the rent payment, that debt service into the subsidies that you're going to need. And a combination of that gets you to where you need to be, right? And you don't have to pay the debt off all in 1 year. You can stretch that out to 15 years.
It's so good. What you all offer is just so helpful,
Mhm.
and most folks, including me, I didn't know, just what all the possibilities were, but
Mhm.
um, just having a conversation with you, because I've been in a few of those where I connected a nonprofit with you and we had a
Yep.
conversation about options,
Yes.
just blew me away. It just was very non-traditional, and
Yep.
different approaches. So with
Yeah.
less risk, right?
It's not going to be for everybody, but at least we're talking, and at least we're expanding the amount of options that you have to solve your problem. And that's all we're trying to do, right? Is give you more tools than you know you had before, right?
Yeah, yeah.
Um, so the other advantages I think is that when you grow your net assets, you look better to your funders. Okay. So if you own a building or you own equipment, or if you've had a successful campaign, now you're on paper, your book value looks better. And a lot of philanthropies, at the end of the day, you know, this is just my opinion, okay? But if I was a philanthropic grant officer, my job is to mitigate reputational risk, right? The last thing that a philanthropy wants to do is invest in a project that doesn't come to fruition,
Oh,
right? And what is the donor going to do? They're going to say, what did my money go to? Where is the impact? What just happened here, right? So what their job is to mitigate risk. And if you're an organization that doesn't have any assets, doesn't look strong on paper, um, the, doesn't look like they've managed, their financials appropriately, um, that's a that's a leap. That's a bigger leap than maybe another organization that looks more safe.
that's exactly right. They're looking for what's the risk and
Mhm.
what's the return in terms of, helping people or helping animals or the environment or the economy or whatever it is. Those are really great points. Um, so can we kind of talk about, in a very practical way?
Mhm.
I like to break things down as simply as possible for people who are listening or will watch this later or hear it later.
Sure.
What types of projects or things do
Mhm.
you typically, provide funding for?
Yeah, so as long as it's a nonprofit, it runs the gamut, you know. We've funded, and I mentioned, ModCon. I'm really proud of that project because I think it was just kind of like the basics. That is more of our bread and butter kind of investment,
Yeah.
where it's just transitioning from rent to own. They already you've seen historically that they can afford the rent, so there's no difference, right? And so it's a kind of a base hit for us, slam dunk. Um, Other projects that we've been able to do is we just approved the deal for NIAP, which is National Youth Advocacy Program. I think that's the acronym. And they were consolidating. So they had multiple offices in different locations, and they found a school building, and they're just renovating that school building and moving in. And so now they are able to have a lot more efficiencies than they had before.
So,
And then
Omar, for
mhm,
that project, did you
sure,
do are you, what did
we helped
your
them purchase
funding help pay for? Was it like
purchase the
renovations? Was
school.
it,
Yep, purchase
yeah,
and renovation.
purchase the
Hmm.
building? Great.
Yep, purchase and renovation of the building. Yep, I think it was like 300,000. They needed to like
That's great.
renovate the basement with more AC units and HVAC and that kind of thing. But and those are two. So ModCon was a medium-sized organization. NIAP was a large organization, and then a small organization that we were able to help was all that teens hopeful about tomorrow, which is the acronym. Fairly young organization, less than 500,000 in size, and genius director. I'm just always blown away by these executive directors and their
Yes.
creativity and their courage and their tenacity, especially when they're like founding organizations. That founder is just like amazing. So she was one of those, and I'm just like so um, lucky that our paths crossed. Even if we didn't do a deal together, you know what I mean? Sometimes I'm just like, I just want to be your friend because you're awesome. um, but uh, but Danella was really resourceful. So she was renting space from a church, and the church was had declining membership, and they were not interested in owning the building anymore. So they liked her, so they said, "We'll offer it to you, and as long as you can, pay us." So I think it was like 200, 250,000, and her uh, her her financials showed that she could afford uh, a note on that building. But in addition to that, though, here's the thing. So she bought it from Church A, okay? And Church A merged with Church B, so they were not going to use it anymore, okay? Then she turned around and rented to Church C. She didn't need the worship center on Sundays. She didn't
So
need the big old
smart.
parking lot, right? And so the Church C rents it at $2,000 a week, and Danella ends up getting $8,000 a month for her program.
That's amazing.
So the prudent use of capital, when you use it right, can also increase your revenue,
Yeah.
right?
Brilliant.
Um, it can increase your revenue. It can save on cost. It
Yeah.
can also add more certainty to your business plan long term.
That's right. And we have like 3 minutes left. This goes by so fast. I
I
know.
know.
This has been incredible. Um, those are amazing examples. And I just want you to talk a little bit about, you know, how you engage with people, because when you
Hmm.
engage with people, you do that kind of brainstorming and
Hmm.
like, how are all the ways that we could make this beneficial for you, right?
Yeah.
Whether in whatever ways that means, revenue, you know, uh, 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 more mission,
Hmm.
more serving more people, whatever. So talk about that for a minute.
Oh God. I mean, it really does take creativity, and I think the reason why a CDFI is a good fit for a lot of nonprofits is because it can be flexible. Where a bank is just going to say, "Are you in the box or you're not on the box?" Right? So they have a credit window, and if you're in that credit window, then great. If you're not, then I'm sorry about your luck. Right? That's why when I said rich people getting richer, the banks compete with with the small subset of the population that doesn't actually need a loan. So, but they're throwing all kinds of stuff at them because they're the safe bet. Um, I'm sorry, your question about creativity, right? So
Yeah.
I think that what I think I want to get out of this conversation is just for all the listeners to say, like, let's talk, right? And if that if and just options are out there. And I the last thing we want to do is default on a nonprofit, right?
Right.
And here's the thing, this isn't even our money.
Yeah.
We're assuming the risk. right? So we're in the same boat as you, right? So when we're assessing this risk, it's not like it's our money and we're going to give it to you and then, whatever. If you default, then that means we have to default. That means we have to eat the cost too. So, um, so that I think can help people uh, maybe feel a little more comfortable because
Mhm.
we would never, intentionally put you in a bad position, right? Our
Yeah, it's
whole
like
thing,
you're in a boat together. You sink or
exactly,
swim together.
exactly.
Yeah. One of the ends of the
Um,
boat doesn't go down without the other one, and both have to be up. It's
exactly.
beautiful.
Yeah. And I'll say just one real quick. I know you're running out of time here, but you know, there are real um, barriers to access to capital. Many of your listeners probably have gone to the bank and gotten declined. And I'm here to tell you that the way that they underwrite deals is different than the way we do.
Mhm.
And to leave that door open to a CDFI, and maybe there might be um, some ways that we can work with your donor base, your philanthropy, your community to make uh, make a difference and strengthen the organization,
Yeah.
right? So a strong enterprise is in a position to do more good.
Yeah. Thank you. That's incredible. So, what's the best way for people to get in touch with you? And before you answer this, that I
Mhm,
should say, I just put a link to the article you wrote, which is
mhm.
another great piece of good information. A lot of great information in there for all of you. But how should people get in touch with you if they do want to have this conversation?
I'm going to do something a little unique. I'm going to put my Calendly. I'm going to go on Faith and I'm going to put my Calendly
All right.
link on
That's
here.
great.
And if
Thank
anybody
you.
wants to have a conversation with me, go ahead and use this link and we can have, a 45-minute virtual call
Yeah.
and talk one on one.
Great. That's wonderful. Kathy, we didn't get to your question, so I'm gonna ask that real quick, before we sign off. We're gonna go over just a minute, but, Kathy is doing an unusual project. She and her husband are buying houses, renovating them,
Hmm.
and then trying to get folks who wouldn't have access to good housing into those houses, so one family at a time, one house at a time. And what she
Hmm.
asked, and I think with your connections in the housing industry, affordable housing industry, maybe um, she has been challenged as a landlord in finding experienced partners. So, are there um, organizations where landlords might connect with to learn how to get started helping those at risk populations where maybe the nonprofit would be the person to, say, hey, here's a family that needs a house,
Hmm.
and maybe they're supporting them a bit on the social service side, but then Kathy and her husband are the landlords. So, do you know of that?
I, I mean, I think, are you familiar with Renter Mentor? I think
Yeah,
that they've been doing some
renter
really
mentor.
phenomenal work about connecting landlords and tenants. And I think that's the
Yes,
question that she's having
yes,
is an issue with.
yes. Yeah,
Um, so that's I think it might be a good resource. I would
good.
say um, when we talk about housing and the barrier to entry for nonprofits, one of the things that nonprofits choose to do is locate and invest in communities that are under resourced. And we've had those redlining issues, right? That means
Hmm.
that the valuations have been artificially depressed.
Yeah.
And I'm sorry to go in long here, but one example is, let's look at Linden and let's look at Clintonville.
Hmm.
Both have the same housing stock. They were
Hmm.
built at the same time, proud owners at either end of the spectrum. And then the highway comes, right? 71 comes afterwards. So the housing stock is the same, but the valuations are not, right?
Mm-hmm.
Clintonville, 500,000, right? Linden, we're just breaking 100,000, maybe a little under 200,000 now, right? Well,
Yeah.
historically, Linden, you could get a house there for 10,000. What's the
Mm-hmm.
difference, right?
Mm-hmm.
We know
That's
the
right.
difference. And so when a nonprofit chooses to locate in Linden, they're going to have a higher barrier to entry than if they choose to locate in Clintonville because the valuation is not going to get there, right? That
Yeah.
means that you're going to have a higher down payment. Who has that? Nonprofits don't
Mm-hmm.
have unrestricted capital to put down on the higher down payment. So that's one of those barriers that we break, right? Because
Yeah.
we are able to finance something at 95% of cost, not appraised value. We throw out the appraisal because we know the racial injustice and the history that those appraisals have.
Yeah.
They're being valued on the historical devaluation of those communities.
Yes. Oh gosh, thank you. That is amazing. Um, yeah, you have so much to offer. People out there listening, even if you're thinking, should we maybe borrow some money to do this thing that we want to do or serve more people, whatever it is, get in touch, please. And I am sharing your Calendly link out as well. Um, so that's the best way. Get on his calendar, have a conversation.
Mhm.
He's so wonderful to talk with. It's
Thank
amazing. Do it. Do it. Don't even hesitate.
you.
Um,
Yeah.
somebody else, Dean Pulliam added Home for Families might be another resource for you, Kathy. So
Great.
since you were the only question, we wanted to address that for you. So thank you so much for doing that too. It has been a pleasure. Loved having you on. Always welcome to come back anytime. This is such a hot topic, and it brings with it a lot of stress and anxiety and
Mhm.
feelings, that people have about money, personal experience. Like
Mhm.
we all have our money scripts, right? Our money stories.
Exactly.
And
Mhm.
it's for some people, it's just really a scary topic. So this has been incredibly helpful to dispel a lot of myths and fears. So thank you so much. I'm thrilled to
Thank
have
you.
you.
Yeah,
Um,
we have so much more to talk about.
oh my gosh, we could,
This is a
yeah,
heavy
let's do this
topic.
again soon.
Yeah. Mhm.
um, yeah, thank you all for tuning in. Join us next week when we'll have another great conversation with somebody else, and looking forward to that. Omar, can't wait to have you back. Thanks everybody out there for tuning in. We'll see you soon.